Hello friends, welcome to Price and Pedia. The stock which I wanted to discuss with you guys today, name of the stock is PN Gadgil and the company is from jewelry sector. The reason I'm covering this stock is because there's a huge tailwind in the jewelry sector. Before we understand the tailwind in the jewelry sector, we have to understand that stock, that company which holds the leadership position as of now. This leadership position was with Titan before, but now this leadership position has been shifted to Kalyan. The reason why Kalyan, I say that Kalyan is the new poster boy of jewelry sector is because if you look at the quarter one and quarter two results of Kalyan, they are far better than the results of Titan. So clearly, Kalyan has outperformed Titan, right? And if you look at the stock price, it has gone up 10 times since it got listed, and the P has gone all the way from 20 to 40 to 80 to 100, and right now the P is at around 120. So market is giving rich valuations to Kalyan because the business model is good, the way they are expanding, and the way their profits are increasing, the way they are growing. So Kalyan is in a very different territory altogether. Now this is all about Kalyan. Now our focus next is on the jewelry sector. Why this tailwind is happening in the jewelry sector? What is the reason that suddenly these jewelry stocks have come up in our radar? The reason why jewelry sector is growing so fast these days is because the organized sector is taking the command. Earlier in 2001, the organized sector just had 10% share and unorganized were around 90%. But if you look at now, in FY22, the organized sector grew from 10% to 33%, whereas the unorganized decreased from 90 to 67%. And in FY26, the projection is that the organized sector will grow from 33% to 42%, whereas the unorganized sector, the share will fall from 67 to 58%. So the main reason for this tailwind is that the organized sector share is increasing and the unorganized share is decreasing. And I'll tell you a very surprising fact that in 1994, the organized players share in the jewelry sector was just 0%, and since then right now they are at around 42%, and it's further expected to increase. Now why is this increasing? The reason is that people are more conscious of the brands and they want more reliability, they want more designs, uh, they will not probably trust a local jewelry person, right? So that's why they are going towards this organized segment, and our middle class is going very fast. The way our middle class is going very fast, so these luxury items are finding more and more place in their wardrobe, right? So this is the reason why this jewelry sector is going. Now coming back to our stock, the reason the PNG Gargil, let's first understand the business model of the company. The company was started in 1832 in Sangli, and then it shifted back to Pune. At that time, it had only one store, but right now the number of stores are around 39 in Maharashtra only. So this company only operates in Maharashtra, and the 28 stores are in COCO model. COCO model means company operated and company managed, right? And all these 28 stores are in tier 1 cities like Nagpur, Pune, and Bombay. And the remaining 11 stores are in tier 2 and tier 3 cities, right? Okay, so these remaining 11 are managed by their franchise. Revenue, if you look at the revenue per square feet of this company, it's at around 6 lakh, and this is the best in the industry. Even if you compare it with Titan or Kalyan, it is better than them also. If you look at the revenue per store, it's 170 crores, which is again best in the industry. It's better than Titan and better than Kalyan or any other peer if you compare it with. Now, what is the reason for this staggering figure which they have? Revenue per square feet, best in the industry, revenue per store, best in the industry. What is the reason for that? Reason is that they are both customers and workers are fourth, fifth generation, because this company has been operating from last 200 years almost, right? The workers which they have are fourth, fifth generation workers, right? So they have transferred their skills from generation to generation. So now the workers which they are getting, they are the most updated ones, right? Besides the customers have been with them from last 5 generations, so that gives them a huge edge in Maharashtra. Now what company is targeting? What was the reason for bringing this IPO? The reason for bringing this IPO was that the company is targeting number one place in Maharashtra. Currently, Titan has around 60 stores in Maharashtra, and Titan is the number one in Maharashtra. But they are aiming to cross the 60 stores, and they want to become number one in Maharashtra. Once that has happened, then they'll expand to the other states as well. Now, if you look at the this quarterly results were not so good. The reason was that the margins decreased. The reason for margin decrease was because the stud ratio was around 11%. Now the company has said that they are aiming to improve the stud ratio from 11% to 15%. So what is this stud ratio? Stud ratio is the, in the gold jewelry they put this diamond, the amount of diamond that they put, that determines this stud ratio. Because diamond is a high margin product, more the diamond they'll use, the better they'll get better margin. So they are aiming to increase the stud ratio from 11% to 15%, and that will increase their margins as well. Once the margins get increased, then the operating leverage will come into picture as well. Now they had an inventory loss this time because of the duty for the duty was reduced, and if that duty had not been reduced, they would have probably made good profit in this quarter also, and their margins would have been better. But because of this duty, what happened was that they had a loss in the inventory and their margins also decreased. So that was the main reason why the margins have been low, and that is the main reason why the stock is getting punished. If you look at the chart of the stock is only going down and down and down. But that is not the point. That is not the time to panic. We should watch this stock like a hawk, and whenever we see some consolidation happening in the stock, we can consider this stock for sure. This is not at all a recommendation. This is just my analysis. Right? Okay. Now, as far as the expansion of the stores is concerned, in quarter 3 FY25, company is expecting 5 to 6 stores that will be opening. The next quarter, we are running in quarter 2. Now, the quarter 3 is about to start, and company is expecting 5 to 6 stores that they would be opening. So, the total number of stores will go to 55. And in FY26, they are targeting around 10 to 15 stores that they will be opening. And once these 10 to 15 stores are opened, they will get this number 1 position in the Maharashtra, which is right now with the Titan. They have around 60 stores, as I just showed you, right? So they will cross that 60 stores, and then they will become number 1 in Maharashtra. Next target is to enter MP, Chhattisgarh, UP, Bihar, and Delhi. In FY25, they are targeting a revenue of around 8,000 crores. I'll shortly share the P&L statement with you. Right now, the revenue which they are clocking is around 6,000 crores, and they are targeting a revenue of around 8,000 crores. And in FY26, they are targeting a revenue of around 9,500 crores. So this is a 30% revenue growth that they are targeting. So the company has got good projections in the coming days. And even if I look at the forward P of the company, it's for FY25, it's coming at around 45, and FY26, the forward P is coming at around 38. So that tells me that there's a huge chance of P re-rating in the stock. There's a huge chance of P re-rating in the stock, and this stock can do very well. All we have to do is to wait for the price to just when the selling stops completely, then probably we can consider this stock. We'll get this stock at a very less price. All we have to do is to just focus on the chart now, since we are well aware of the fundamentals of the company. Now, if I look at the quarterly result, I told you that this quarter results were not that good, right? The margins, if you see, the margins are at around 3%, which has fallen from 4% in last quarter. It has gone down to 3%, right? So this fall in margin is the main reason why the stock is getting punished here, right? But if you look at if I compare September revenue, the revenue has increased by almost 50 to 60% here, 13 something, and here 2000 something, right? So clearly the revenue has increased here. At the same time, profit, if we see, it has gone up from 22 crores to 32 crores. But if I look on quarter to quarter basis, the profit has fallen from 35 to 32, and the margin has also fallen from 4 to 3%, and that is the reason why the stock is getting punished. But although the stock is getting punished, this is an opportunity for us. All we have to do is to watch this stock, and whenever that selling gets over, then probably we'll get it at an even lesser price than what it was listed in the market, because stock is almost down by around 25%. Now, if I look at the year-on-year results of this company, the revenue grew by 46%, margins are stable at around 3%. The margins would have been better if this import duty decrease had not happened. And PAT grew by around 59% year-on-year. The company has recently opened around 9 stores in Navratri. Now the total store count is around 48. If you look at the year-on-year growth of the company, the year-on-year growth is huge. Look at this. It used to be 2,300 crores, and right now it is at around 6,000 crores. I told you in FY25, in FY26, they are targeting around 8,000 crores, and then they are targeting around 9,000 crores in the next year, as far as the revenue is concerned. The net profit has gone all the way up from 95 crores to 154 crores, right? So the company is looking uh, quite good. Now, if I understand the revenue of the company gets its revenue from three main regions, three main countries. In fact, from UAE, they don't get any revenue now because they had only one store in UAE and that got closed because it was running into the losses and all that. So they closed that uh, center completely. Right now, they are getting revenue only from India and USA. In India, majorly they are getting the revenue from Maharashtra, and USA they just have one store open and they're getting their revenue from USA as well. Now, let me. There's a very interesting figure that I wanted to discuss with you. Inventory days. Inventory days means in how many days does their inventory get finished. So lower the better. If I say a company A finishes its inventory in 50 days and a company B finishes its inventory in 100 days, definitely company A is better because it is finishing its inventory in 50 days only, right? Inventory means the goods they have, goods they want to sell, right? If you look at PN Gadgil, their inventory days is just 63. That means in 63 days their entire inventory becomes zero. That means they sell all their inventory. Whereas if you look at Kalyan, it sells its inventory in 191 days. That's huge. Whereas Senco sells its inventory in 202 days and 𝗗𝗏𝗦𝗟𝗓 sells its inventory in 128 days. So this is much faster than Kalyan, much faster than Senco, and much faster than 𝗗𝗏𝗦𝗟𝗓, right? And if I divide this 365 by 63, that will give me the inventory turnover ratio. That means how many times they are able to churn this inventory. So it comes to around 5. So 5 times in a year they are able to churn this inventory. So when, as far as the inventory days are concerned, inventory days lower the better, but inventory ratio higher the better. So inventory ratio for them is around 5. That means 5 times they're able to churn their inventory, whereas Kalyan is hardly 2 times. And even Senco is less than 2. This is also quite less, right? So PN Gadgil is far ahead of all the players in its. The most important point to note here is that PN Gadgil is ahead of Kalyan, right? Kalyan takes 191 days to finish its inventory, whereas PN Gadgil takes only 63 days to finish its inventory. So this parameter tells us the potential of PN Gadgil for sure. Now, let's try to understand the footfall of this company. The footfall of this company has increased by 27.7%. That means of 100 people who come to their store, 27.70% customers end up buying their product, right? And the CAGR, the compounded annual growth rate for gold jewelry is around 16%, and for diamond jewelry it's 22%, and for silver jewelry it is 3%, right? So they are going at a fine rate. If I compare the PE of all the stocks, then PN Gadgil is at around 54 PE. Senco Gold looks cheap at around 39 PE, but I told you that the forward PE of PN Gadgil is around 45 something for the next year, and next to next year the PE is around I think around 38 or something, right? So PN Gadgil looks quite well placed as far as the PE is concerned. Now lastly, let's understand the chart of this stock. Now the stock opened here, and if you see in the very first candle there was huge volume. That means there was huge selling that happened at the start only, and after that stock consolidating, it formed a, sorry, it's not an ascending triangle breakdown, it's a descending triangle breakdown. I'm sorry about that. So this is a descending triangle breakdown which happened, and this was the support which the stock broke and it came down. Now why did the price fell? The price fell because the results were not as expected, right? Results were not as expected because the results, the margins got contracted, and the reason for that contraction is that the import duty which came to them, and that resulted in the reduction of the margin. Besides the stud ratio is just at around 10%, as I discussed. Once the stud ratio increases to 15%, what will happen? The margin will improve and the operating leverage will come into the action. Now stock having broken this major support here, right, it is quite possible that the stock can go further down here. Now all we have to do is that we have to watch this stock like a hawk, and whenever it gives us an opportunity, whenever it consolidates for at least 1 to 2 weeks, it's not that if you see just one green candle and you get into the stock. You have to watch out for a proper base formation here, and whenever that base formation happens, then probably you can consider this stock. This is not at all a recommendation. This is just my analysis, a TECHNO FUNDA analysis, which will definitely help you, and it will decrease your time to research on the stock, right? The other stock which I had given last time was epac durable. I have not posted the chart of epac durable, but if you look at the chart of epac durable, it's still looking very weak. So there is still no strength in epac durable. No need to panic at all. It might further come down, and it will give us a very good opportunity at a lower cost. So please stay focused as far as the epac durable is concerned. I give time to time updates on my Telegram channel also. You can join my Telegram channel where I'll be posting updates on epac durable. I'll be further posting updates on PN Gadgil as well. As and when I see that PN Gadgil is forming a nice base and there's a reversal in the stock which is expected, then probably I will definitely let you know that the price structure has gone better in PN Gadgil. So this is it from my desk today. I hope you enjoyed my analysis. Thank you very much. Have a great weekend. Do let me know about this video, whether you liked it or not, and in case you want me to add any further points in the next video or any other stocks which you want me to cover, I will definitely do that. But do make sure that those stocks which you propose in the Twitter, the stock should be in stage 2 uptrend, because now on I'll be covering only those stocks which are in the stage 2 uptrend, because the last two stocks which I covered, one was epac durable, other is this stock, both are not in uptrend, right? But now on I'll be covering only the uptrending stock. So do watch out for my video next week. Thank you very much. Goodbye and good luck. Have a nice weekend.